Before we start, let me ask you something simple. How much are you paying for car insurance right now? And what if I told you that in 2025 you can legally and easily reduce that amount without cutting your protection or taking any risky shortcuts? In this first part of the guide, I'm going to walk you through the foundation of lowering your car insurance step by step. These steps work everywhere, they are simple to follow, and if you apply them correctly, you can save a surprising amount of money this year. So stay with me. Car insurance companies are constantly updating the way they calculate your premium. In 2025, they're relying even more on your driving data, updated risk algorithms, and smarter pricing tools. That means even small adjustments from you, things like updating your mileage, changing the insurer, adding a safety device, or correcting outdated information, can reduce your premium. This guide will show you exactly how to use those changes to your advantage. The first major step is learning how to shop smart. Most people simply accept their renewal price without looking at alternatives, and that is the biggest mistake. Every insurer calculates risk differently. Some penalize young drivers more, some don't. Some reward clean driving records heavily, while others barely give a discount. That's why you must get several quotes before accepting any renewal. But make sure every quote has the exact same coverage, same deductibles, and same limits. If one has lower liability or a higher deductible, it may look cheaper, but isn't truly comparable. When all details match, you'll clearly see which company values your risk differently. And that's where you can save. Next, let's talk about one of the biggest insurance trends of 2025. Usage-based insurance, also known as telematics. These programs track how you drive using an app or a small device inside your car. They measure how smoothly you brake, how often you drive at night, how fast you accelerate, and how safely you behave on the road. Although some people worry about being monitored, this is actually one of the best ways for safe and low-mileage drivers to save real money. After a trial period, good drivers often receive noticeable discounts. If you're confident in your driving skills, this is a powerful tool to lower your premium. Now let's move to bundling. Bundling means combining your auto policy with homeowners or renters insurance under the same company. Insurers love when customers bundle policies because it gives them more business. In return, they offer discounts that are usually impossible to get on a single standalone policy. Even if another company offers slightly lower auto insurance, the bundled price often beats it. Always check bundling before choosing a company. Another strong step is raising your deductible, but only to a level you can afford. Your deductible is the amount you pay out of pocket for collision or comprehensive claims. When you raise it, your monthly premium goes down. But here's the rule. Never choose a deductible higher than you could comfortably pay in an emergency. The idea is to reduce cost without putting yourself in financial danger. Always calculate the difference between your current premium and the new one to see whether the savings make sense for you. In many cases, especially with older vehicles, you might also consider changing your coverage. If your car's value has dropped significantly, paying for collision or comprehensive coverage might no longer make financial sense. If the annual cost plus your deductible is close to the car's value, you are essentially paying for protection you may never use. Switching to liability-only coverage can dramatically reduce your premium, but do it carefully and make sure it fits your situation. In the next part, we will continue with more practical steps, including upgrading your car's safety, correcting personal information, understanding discount opportunities, and learning the negotiation process before renewal. These steps will help you save even more. Keep listening, because Part 2 will show you exactly how to maximize your savings. Welcome to part 2 of this guide on lowering your car insurance in 2025. Now that you understand the foundation, it's time to apply the advanced steps that can reduce your premium even more. These steps are simple but often overlooked, and using them correctly can dramatically change what you pay every month. Let's start with improving your vehicle's safety and security. Small upgrades, such as installing an anti-theft alarm, steering lock, wheel lock, or even a simple dash cam, can reduce your premium. Insurance companies reward anything that reduces theft risk or increases driving safety, but many people upgrade their cars and forget to tell their insurer. If the company doesn't know about the safety improvement, you won't get the discount. So every time you add something that makes your car safer, report it immediately. Your driving record also plays a major role. If you've had accidents, speeding tickets, or traffic violations, your insurance may be higher. But here's the good news. Insurance companies track improvement. A few months of perfect driving can help reduce your renewal cost. You can also take a defensive driving course, which many insurers accept for lowering premiums. Not only does it make you a safer driver, but it also shows your insurer that you're committed to responsible driving. Now let's talk about choosing the right vehicle if you plan to buy a car soon. Not all cars cost the same to insure. Cars with high safety ratings and low repair costs usually have cheaper insurance. Smaller engines, good crash test scores, and affordable replacement parts all help lower the price. On the other hand, high-performance cars, luxury models, and vehicles with expensive parts often come with expensive premiums. If saving money is your priority, choose a car that insurers categorize as low risk. Your information matters more than most people realize. Insurance companies calculate your premium based on your details, your mileage, your commute distance, your home address, your job, and where your car is parked at night. If any of these are inaccurate or outdated, you may be paying more. For example, if you changed jobs and now drive less, you might qualify for a low-mileage discount. If you move to a safer area, your rates may drop. Always make sure your information is up to date. Next comes one of the easiest but most ignored steps. Asking for every possible discount. Insurance companies offer many discounts, such as safe driver discounts, multi-car discounts, student discounts, loyalty discounts, paperless billing discounts, and auto-pay discounts. But they don't automatically apply them. You have to ask. When you talk to your insurer, simply say, "Can you check and apply every discount I qualify for?" This one sentence can save you serious money. Finally, the best long-term strategy is to reshop your insurance before every renewal. The insurance market constantly changes. A company that was expensive last year might be cheaper today. Get new quotes 30 to 60 days before your renewal. If you find a better deal, show that quote to your current insurer and ask whether they can match or beat it. Many companies reduce your renewal price when they know you're willing to switch. Before we end, here's a quick reminder. Have your current policy, your vehicle details, your mileage, and any safety device receipts ready before requesting quotes. This makes the process smoother and prevents missed discounts. Lowering your car insurance in 2025 isn't about luck. It's about strategy and being proactive. By improving your car's safety, keeping a clean record, choosing the right vehicle, updating your information, asking for discounts, and comparing quotes before renewal, you can save a significant amount without reducing your protection. Start applying these steps today, and you'll notice the difference at your next renewal. Your financial safety matters, and making smart insurance choices is a powerful way to protect it.